rightly mentioned. So Q1 for the banking sector was an earnings estimate review, which remained quite resilient, but what set the narrative was the margins front. Starting first with HDFC Bank, so it delivered a largely inline quarter with NII up nearly 7% and profits up 5% yearly. The key concern here remained the margin pressure with the NIM slipping to 3.26%. But the positive side was the lower provisions for this quarter, the strong asset quality, and also the management's confidence that the funding costs are going to decline going ahead. ICICI Bank, that was a standout performer among the heavyweights of Nifty that set their results on Saturday. It beat the expectations with 12.7% growth in its NII and 16% profit growth. More importantly, it was the only major private bank to expand its margin sequentially while delivering the highest return on assets, underlying the strength of its franchisee growth with advances surging nearly 19.6% year-on-year basis. Now coming to Axis Bank, which reported a healthy 22% growth for this in the profitability front for this quarter, but the quarter was a miss as the NIMs fell sharply to 3.46%, leading to a weaker core operating performance for the bank. While provisions and credit costs remained benign and asset quality was broadly stable, the margin recovery that remains the key monitorable for Axis Bank. Moving now to Kotak Mahindra Bank, which delivered inline quarter with profits rising nearly 26% on a yearly basis. It continued to lead on the fundamentals with its lowest NPA at 0.27%, supported by lower credit cost as well as the stable asset quality. The only disappointment for Kotak Mahindra Bank was the dip in its margins, with NIMs slipping to 4.53%, reflecting the impact of the softer rate environment. So overall, the key takeaway is that ICICI Bank, it remains the benchmark on profitability, while Kotak continues to excel on its asset quality. HDFC and Axis Bank will be closely watched for the pace and recovery of their margins. Back to you.
All right, let's move.